Jennifer, can you start?
Got it. Hey all, I'm Jennifer Tramontana. I am president and founder of the Fletcher Group. Great to be here today. Thanks for having me, Zach.
Wonderful. Thanks for joining us. Gregory?
Hello, everybody. Gregory Papajohn here, founder of Archie Group. Real pleasure to be here. I haven't seen Zach in too long. I've been missing you.
Thank you.
Thanks for having me, man.
2015, 2016, something like that.
It seems that way.
A few gray hairs ago. And
Yeah.
Scott?
Hey, I'm Scott Mills, president of William Mills Agency. I'm not the founder. It was started by my father in 1977, but proud family business.
Amazing. And you're based outside of Atlanta? Is that correct?
That's correct.
Gregory, where are you based?
Outside of Manhattan, Darien, Connecticut.
Heard of that? And Jennifer?
We're in Austin, Texas.
Woo.
Yeah, that's right. Hook 'em.
Wonderful. So I thought, I mean, you guys are three of the best, financial services PR people that I know of, and I'm really glad you guys decided to join us and participate in this. I'm going to start with Jennifer. Can you talk about how you think PR has changed during the crisis and whether you think, we're in some type of permanent change?
Sure. Well, I guess I'd start with what I don't think has changed. Good PR has always been about presenting an authentic voice and being able to pivot really quickly to changing market and cultural conditions. So that has not changed. Certainly in 2020, we've seen it being heightened that we need better storytelling, engaging with audiences in ways that, really resonate, building long-term trust, all that kind of good stuff. That's clearly still really, really important. So I think it's important for everybody to remember, and even all of the chaos that we're in, that you don't need to throw out your entire PR playbook or strategy for how you were approaching things. But I do think there's a couple of things that are important that have changed. And one is that media have always looked for credible experts, but Zach, I think you would agree with this, that you're looking for even more credible experts now, right? We really need people who've got the data and not just a whole bunch of blowhard opinions to back up what they're saying. So if you're watching this and you're a category leader, you really need to be out in front right now, being really helpful, leading the conversation. If you're not, then I'll bet you all these new entrants and disruptors who are on the call today are going to be out there, nipping at your heels. And if you are one of those, then I would say invest really quickly in some super strong case studies, as well as some great data of your own, so that you can go to people like Zach and say, we've really got something to tell here, and we found something super interesting in the data. So I'd say that has really changed. And then the last thing I would say is that, look, transformation of banking was a huge media topic before the pandemic hit. Now it is even more so. So everything you do for sure in your PR strategy and playbook should be put through a lens of how does this fit with the transformation of, banking and payments. So, don't just throw out a new product press release, but how does it fit with, cash access, brands becoming payment companies, retailers becoming quasi-banks, contactless, whatever it is, make sure that it fits with something that's super relevant and important today, and tell that greater story.
Great. Totally agree. And I'm going to turn over to Gregory now for the same question, sort of if you think we're in a new normal, and feel free to address what Jennifer said if you agree or disagree. That's also game.
Yeah, you bet. I was thinking about this today. I'm going to date myself here. 20 years ago or so, one of my first fintech clients was an internet bank, right? And I was thinking about how little things have changed. That internet bank, and I think this goes for a lot of companies in fintech, up until maybe first half of 2019, a lot of fintechs were thinking of public relations as publicity. Buzz. And, the press was feeding on that. You weren't, Zach. Others were. Feeding on it with things called unicorns and near unicorns and soonicorns.
Decacorns.
Exactly. A colleague of mine, I know she's watching, hi Jeannie, just calls it the corns, all right? But I will tell you about by second half of last year, I think the doubters were coming in, right? And the storylines were changing. And I think that was a really positive thing. And in a way, we're almost fortunate that 6 months or so before COVID, folks were perhaps taking a pause and reflecting again on what is public relations? Is it not relating with the public? And if I'm relating with the public through one lens, publicity, buzz, filling the top of my funnel? Am I missing opportunity to do a lot more? I had that good conversation with a lot of my clients. But then when it was, February of this year, Anu made reference to this, and we're sending clients to speak at events, and we're like, well, what are we doing? Is that right? The change that I've seen in the last few months would be a fuller embrace of all of the opportunities you have through public relations, all the audiences you can be working with, this idea that you have many levers. One lever might be what you do to bring forward your brand, but other levers are how you do good in the community. Still other levers are how you present a good customer experience, and perhaps over the last 3 months, relief to your customer. And still other levers are thinking about your investors and where your valuation has moved or your financial stand. I've really enjoyed, in an odd way, because what a terrible time it's been, but to see this resurgence of multidisciplinary thinking around public relations. So that's one positive change, born out of obviously a terrible event.
I like that answer a lot. Scott, what has changed? What hasn't changed? Are we in a new normal?
Well, going last is the hardest. I'm not going to disagree with anything that Jennifer or Gregory said, but I'm a bit of a nerd when it comes to understanding the relationship between financial institutions and their probably most important public, and that's their customers. So we work with some mortgage lenders, we work with some community banks, we work with an awful lot of vendors and data providers, and this is one of those years that's going to go down, like 1929 or 1968. People are going to talk about 2020 forever. And the bad news is that some of the companies that do business with banks aren't going to make it. Some of the publishing companies that we deal with as PR professionals aren't going to make it, or they won't be the same. And so that'll change. But, it's not all bad. Some of the things that we're seeing in this recession is savings. So we've been reading articles for years about how 40% of Americans don't have $400 in case of an emergency. Well, I'm pleased to report via Jamie Dimon that the savings rate of households in the US is higher than it was in the 1960s. So I think that's kind of cool. So, not all bad.
I like that answer as well, although I wouldn't say if I didn't like it, to be honest, just to be honest, to be brutally honest. So Scott, let's start with you now. What is the number one, and these are obviously tough questions, and I realize that as we're throwing them out, but they're really made to generate discussion. So what do you think is the number one PR priority for a financial institution right now?
And that was probably the toughest question for me to think about heading into this. And I'm not sure you'll like this answer because it's kind of from a banker perspective, but bankers have maybe a little bit of a challenge understanding the value of their banks right now. And that impacts things like M&A activity. So that's probably come to a screeching halt, but it impacts their portfolios, and it impacts the credit risk of these loans. And I won't quote it exactly right, but about 30% of Americans were late on their mortgage payments last month. How's that going to impact the bank and your relationship? And are you going to have some different processes in place? The other thing that I think is important for banks is to consider segmentation kind of in a different way. And it might require some really good technology to help you do that. So for example, if Gregory's significant other and you go apply for a loan with your bank, and a lot of your partner's revenue is 1099 or gig economy stuff, does the bank consider that as regular income? So these are we're going to have more of these kind of specialty opportunities for banks, and that impacts the PR programs because you're going to have to do something specific to go after those segments and let these folks know, hey, I want you as a customer, and let's do business.
Got it. Gregory, would you like to take a stab at that? The number one PR priority for a financial institution right now? Easy
I'm
question.
going to use one of the words you just used, prioritize. We have a lot of constituents we're working with. And so, I mean, the public, right? I think early on, maybe it was March or April, I outlined with clients 10 or so waves of priorities that may come forward, at least so we could forward plan. And wave, back then, wave number one was right at home. It was your employees. That was the first. What are you doing with your internal stakeholders? And wave two after that was probably the folks helping to finance your company, interestingly enough, right? 3, your customers. And we saw great waves around prioritizing relief, recovery, support to a customer. 4, you started to see a lot of companies start to think about a broader community where they live and work, and how could they engage beyond just their customer base. Though there was a bit of a friction there, because at least from a communication standpoint, because you were hearing plenty of companies say, well, I don't want to do a net new loan because I don't know you, right? I know who I know, and I'm going to do business with who I know. And now I'm going to triage among who I know and put them into different buckets, the relief bucket, the watch them bucket, and let's give them a little more help bucket. Right? And we all read this. We saw this happening. But if I was trying to prioritize, I'd give an adage that's actually flipped. I think it's flipped a little bit in the last, this year. The adage goes like this, that brand is the promise you make, right? But reputation is whether you keep the promise. Interestingly enough, I think this year that's changed. So brand is the promise you make. When you have young companies, they make a lot of promises, right? When you have a bit older company, you got to keep those promises. That becomes your reputation. That's a little bit of a saying. Mm-hmm. But I think that's flipped a little bit this year. Reputation is the promise you make, right? Because you may not be here in 3 months or in 6 months. So go back to the word prioritize. You heard me then say prioritize among these constituents. Perhaps you can forward plan, anticipate waves, but then having this thought that there's always been the other adage of walk the walk, but now your reputation is fully on the line with these choices you make and how you prioritize and who you communicate with.
Got it. And Jennifer, what would you say is the number one PR priority for a financial institution right now?
Well, I think one of the things that I'll add that along with everything that Gregory and Scott said, which is great, is being close to your consumers is more important than ever, right? It doesn't matter whether you're a financial institution or not. And people are changing their behavior and their attitudes and what they're open to on like a weekly basis now. So I think it was this week I read, in Google's Think with Google newsletter that agility is the new growth, right? Like that's what everyone's gonna have to be focused on right now. So that's tough if you're a financial institution, because that means that probably like every 2 weeks, you need to be relooking at your, your customer data, and what does their forward-looking, attitudes look like, pivoting and changing your message. I mean, that's a real challenge for any business that is not like a startup environment, to be able to constantly looking at and anticipating what customers need and changing up the message to adapt to that. But that's what we need in these times, period. And also, not just looking at what consumers care about today, but trying to look into what are they doing what are they doing into the future. So Pinterest has actually been doing some great charts on what people are searching for, which is showcasing like, it might not be what they're doing today, but this is what they're thinking about doing in like 4 to 6 weeks or whatever it is. So really being on top of that, and then somehow figuring out a mechanism in your organization on how you're going to be able to change your plans and your message quicker, which most financial institutions are not set up well to do. But that's going to be really imperative for the next, 6 months, a year, who knows how long that'll be. And it could be forever. Maybe that's something that's going to change permanently.
That makes a lot of sense. So let's move to the next question. We'll start with you, Gregory. And feel free to bring examples from your own clients. I want to hear specific examples of firms that get it, that are doing it right or doing it wrong. And I'd love to hear sort of, if you can name them by name and what they're doing, a little bit of a like mini micro case study here.
That's awesome. Get me in trouble, huh?
Yeah, exactly.
We're not supposed to be front and center like this. You know what? I'll go back in time. Let's go back in a time machine together. 15 or so years ago, man, not quite, 13 or so years ago, I was working with a bank called Bank of America. I guess we've all heard of it. And at that time, the bank was struggling. The Great Recession, onset of the Great Recession, struggling with a choice, a public relations choice, but also a business choice. Do we stop fees when we know that our customers, because they no longer have their direct deposit, have lost their jobs, right? 13 years ago, that was a really hard decision to make. And prior to 2010, I worked with the fintechs of the day, and they were called Bank of America and called American Express and MasterCard. Those were the fintechs, right? We just didn't have the coin term to roughly 2010. And, you know, if the CB Insights crew is on, I like your data and reporting. You get a plug from me, not a client. But 13 years later, no one blinked at not charging fees. No one blinked at forbearance. No one blinked at offering customer relief. Anu, I get to use a client example. Told you just about that. All the decisions they went through and how they were going to relieve and support a customer and what that could mean, what public relations could be transformed into. It could come to life as customer experience. It didn't have to come to life in a press release or talking with the press. Now, conversely, I've also seen some things where I definitely scratched my head because I thought it was premature. I thought it was a missing of priorities. I love this company. I remember when Cabbage pretty early on said, hey, we're going to set up a marketplace and get gift cards out. At the same time, Cabbage was probably saying, we're not going to make a loan and we're going to pull back your credit. We're not going to tell you that. That's a communications or a miscommunication, right? That's a missed moment in time. And that's unfair. I don't want to be unfair. That's just making difficult decisions during a difficult time. The heart was in the right place. The decision-making needed to catch up to the heart. And I think that's what we're seeing. I think it's right to see companies use their heart and empathetically go out to the market and figure out how to present a solution when they don't have all the information they need. And I think it's right to watch that client say, you know what, or a customer say, you know what, I didn't quite get that right. Let me change and move so quickly. 13 years ago, folks didn't move quickly. 13 years ago, it took 6 months just to pull fees, right? Today, fees pulled on the same day. Thank God for technology. By the end of this year, we should all anticipate, we're all writing about it, that we're going to have new companies, new products from our beloved fintechs in the market in 6 months. 13 years ago, it took 6 months just to pull fees. In 6 months, we'll have whole new companies. I think that's exciting. And that's maybe a case example that I would, bring forward today.
Definitely, that compressed time frame is it's earth shattering how quickly some of these companies move during this time period. Jennifer, can you give us a micro case study? It could be who's doing something well, who's doing something poorly, and why. Just talk about it.
Yeah. So I think to me, when I heard this question, it just immediately brought to mind the paycheck protection loan process here in the United States. And we've got a global audience. I'm sure most people have heard of this. But the PPP loan process was, I feel like, the biggest example of the chasm between, the fintech, bankers and lenders, and then the traditional FIs on the other side, right? So this was like all of a sudden, like the chasm was here, and then, oh my gosh, like in this process, in this sort of process that we tried to go through, it just like opened it up tremendously. And I think in general, the fintech community did an incredible job of trying to put goodwill programs into action to really make this easier on businesses. And anytime you're doing that, it's good PR, right? Like that's not a spin process. That is really just doing a great job trying to make their easier online, application processes for small businesses to get their paycheck protection loans. And versus what, the traditional banks were doing, which was unfortunately putting to the front of the line their like largest customers, including, companies companies like mine who didn't get their loan through their top 5 bank that they've been with, forever. And I now have a relationship with, shout out to Vista Bank out of Laredo, Texas, who I'm now a customer of. So anyways, but not a client of mine, wish they were, but Citizens Bank of Edmond, Oklahoma, did this incredible job of being one of the providing a solution to small businesses. And then also what they ended up doing was, people have probably heard of this because it was in the news, Mark Cuban ended up tweeting that he was looking for this exact kind of solution, and they ended up getting together, and then just the PR blew up from there. So again, you can't, orchestrate that all of a sudden, Mark Cuban is going to be looking for your solution and then amplify it. So that was great, exciting news for them. But the bottom line is they were doing amazing things, and they were all over watching, social in the news to be able to take advantage of it. So I thought that was pretty incredible. Great product pivot, good PR, all of that. You should have their CEO on one of your shows at some point. She's fantastic.
Sure.
And then I'll just on the other side, MetaBank is one of our clients. They're, one of these 100-year-old institutions that, have all of the trappings in place of making it difficult, right? To like pivot and change and all of that kind of good stuff. But just with like what Gregory was saying, they internally, they pivoted dramatically during these last 3 months. They changed all their internal processes, cut out what was working, what wasn't working, leading into data-driven communications. Just an incredible way to see that happen at an institution that you would traditionally consider, old school or stodgy or not, not as innovative as some of these others. So there's a lot of examples like that out there that we're exciting to see, during the pandemic, and I'm sure we're going to see many more.
I also love that story of Citizens Bank of Edmond about doing the good work and also having serendipity on your sides.
Yeah, maybe it was good karma, right? So that's it's pretty cool what happened.
So
Scott,
is Bank of Edmond a client of yours?
They are not at all.
Boy, they'd be a great client.
Yeah.
I wasn't going to mention clients in the segment, but I am now. Since you bought Bank of Edmond.
Wait, Jennifer didn't. MetaBank does, yes.
Well, now I am. Bank of Edmond with Mark Cuban did this tremendous PPP offering, and we have a client, Tesla Software, that built that for them. So
that's awesome.
I will share with you the secret of any PR success. You throw Mark Cuban's name on it, you're going to get a lot of attention.
That's it. That and luck. That's about it, right?
People are like, but Jill Casilla, the CEO of the bank, is also a rock star. I agree with you on that one. So.
We're allowed to be shameless, right? Aren't we, the three of us, for a second, right?
Well,
but here's a fun one. Scott, you're making me think of a really fun one. This one's fun. I have to say this example. Small business lender, BFS Capital. Their marketing team, I'm not going to say how large or small they are, went out into the streets, took photos of shops with the handmade signs, closed, open, takeout, masks, in the community, in different communities where they live, Brooklyn, South Florida. They then got a site up, great site, Fighting for Small. Didn't overthink it. Wix, I think it's on, right? In the site, lots of resources for small businesses, but also among those resources, signs that you can download, print. They're fun, they're cute, check them out. That's a company that got it right. And it's a great little case study on how you can act quickly with empathy, and do good for others. When maybe there's some other challenging things where can you make the loan? You have to look at a lot of different things, but could you do something else? Could have you done something else? I always love that example.
I like
credit
that.
to the BFS folks.
Totally. Scott, had you finished your answer?
Well, let me just echo that some of the things that Jennifer and Gregory mentioned. I think bankers thinking with their hearts is kind of new and improved these days. It's something that they're doing right. I think customer service is taking a gigantic leap forward. They want to do a better job there. Speed, which is something that banks have not been historically known for, that seems to be a good attribute for banks and vendors. So if I wanted to point you, let me point you, this is not a customer of mine, but Sunrise Bank in Minneapolis is kind of cool. I was talking to the CEO, David Reiling, earlier today, and they sound almost like a credit union the way they care about the community, but they basically serve inner city communities, and they are a for-profit bank. So it might be something neat to check out.
Great. Next question is, well, I guess my first question was how has PR changed? And now I want to know, like, what is the new normal? I'm not going to go in order. If you guys just want to pipe in as you go, I think that'll work as well. So what is the new normal, and how do financial institutions win in this new environment?
Well, I'll start.
Okay. Jump right in.
Jennifer talked about how she switched bank accounts because of service and responsiveness. I have a friend that sat on the phone for 8 hours trying to get his loan through a top 5 bank. And as a result of that experience, he now is with a community financial institution here in Georgia. So I thought that was a wonderful example of how important it is to, one, to be responsive, but two, it also showed the value of having a personal relationship. And so often, we're talking about self-service kind of tools and how can we keep people out of the branch and that kind of stuff. But I'm going to quote a friend of mine, Lee Wetherington, who's with Jack Henry and Associates. And he says, in a financial moment of need, consumers prefer personal services. And so I think winning in today's environment for financial institutions is to figure out how to insert themselves at that point of need. And if we start talking to a chatbot, when do we get to talk to a real person? Or, how do you do that? Because, transferring funds and paying bills, that's easy. Anybody can do it. But you got to have a person, when there's a real question, or I'm trying to fill out this, business loan application, I need help. I mean, the ones that win are going to be the ones that insert themselves at the appropriate time.
Jennifer, go ahead.
So one of the things that I think we need to address is that clearly in the United States and even around the world, we're experiencing this sort of cultural reckoning and awakening at the same time as we're going through this pandemic, right? And the need for more diverse voices and diversity within our organizations to have their say. And so one of the things I think, and I want to be really practical to those on the phone today and listening to us, is that training your spokespeople better and finding more diverse spokespeople for your organization is going to be really important going forward. So you've got to look deeper in your organization for more voices to represent your company, those from underrepresented groups and just, beyond. We've got, my company is a woman-owned and operated company, obviously, and we've got an all-female executive team. And this is something that's always been really important to us because we see that it not only is the right thing to do, but also just, it's better business dividends long term. So one of the things you may be struggling with, though, as an organization is that at a lot of companies, only the CEO or the C-suite speaks, right? They're the only ones who go out with message. It could be that you're publicly traded or not. And we all know that in the C-suite level, we've got a huge problem with diversity of voices for sure. We're not going to solve that overnight. That's an important thing to continue to work on, but that's not going to be solved overnight. But we can, I think, through spokespeople, we can change spokespeople diversity pretty quickly. You don't always need to have the C-level individual speaking. And if you look in your other, departments like InfoSec and operations and marketing or whatever it is, you're probably going to find very quickly that you have really good voices who maybe aren't the ones going on the earnings call and delivering the news, but who can be your reps at conferences, or you can do byline articles under their, name as opposed to somebody else. We just signed the Money 2020 Be Better pledge. There's probably a lot of companies on here who have done that. If you haven't, I would encourage you to go ahead and do it. But just really making sure that you're using your power and your responsibility to get more diverse voices out there, more panel participation from people who are underrepresented, et cetera. And I think that's going to be very important for our industry to continue long-term to make us, better and have better conversations overall.
Totally agree with that. Just an anecdote that I can share. When we went out recruiting speakers for this event, we only have 4 women, including you, Jennifer, out of 20 speakers. And it wasn't for lack of trying. We were looking for them. There weren't enough diverse voices put forward as speakers. So just a personal anecdote I can share.
Yeah, I get it. And I think that those of us who run agencies, like everybody on the phone or on the Zoom call here today, you know, it's important for us to push our clients to look for, like I said, that next level and that next level down, and to train people up. You can't just throw somebody into a conference tomorrow who has never done this before, but it's incumbent upon all of us to try to, you know, get more training and more voices who can actually speak on behalf of companies. So I get it.
Got it. Thank you. And Gregory?
You know, maybe I'll do a split screen here. I'll talk about PR firms too, right? And I'll talk about what I might be seeing in the industry. In the industry, I think we should expect a new norm at least balance of year. Sadly, it could be in the first quarter of confusion. Just read Robinhood not, you know, launching the brokerage in the UK, and then Monzo restarting subscription finance after stopping. We can go through a list and see that there's going to be some fits and starts. And is this the right time, or should we hold? So I think that partly comes back to that word I was using earlier, that a big need for public relations and communications is how we're going to help prioritize and forward plan. Not just in the moment, but sort of looking out a little bit. Longer term, though, feeling good about the world. We saw some really fun trends last year. I mean, rebundling was a great trend. It's nice to see things coming back together instead of all these single point solutions. I think it was embedded finance or finance as an ingredient across a horizontal and not just a business in and of itself. I think that's pretty neat. And we should expect more of that. I used that analogy of an internet bank, right, 20 years ago, and publicity for disruption. I guess I could have been talking about when I was at MasterCard and we were trying to convince these things called taxis to accept, you know, plastic, right? Who could think that 15 years later, right, it's now called invisible payments, right? We don't even know that you bought anything. It just happens. I think that's amazing. And what that speaks to is openness. It's so transparent, you don't even know it's happening. And I think that's a big role that communications and public relations will play. But when I talked about split screen, well, actually a third one comes to me. A risk. Here's a risk. There's a risk folks are going to get too far out over their skis. Right. All of us, I'm sure that Scott and Jennifer have this conversation where they might hear their client talking about underserved consumers. Underserved. They're really underserved. They're underserved because they're called a Henry. They're underserved because they're a millennial. They're underserved because they prefer mobile. Is that underserved? I mean, when I grew up in the business, underserved meant you actually had challenges with getting access to credit and to finance and the ability to save money. And you were not banked or underbanked or invisible to finance. So I do think there's some risk where folks may adopt some of these terms, underserved, but they're going too far out, potentially on that authenticity question that we had earlier. Maybe you all at Tearsheet have written a lot about accessorizing as opposed to, you know, genuinely serving a new customer need. But when I talk about the model, PR model, just to hit that quickly, one new norm, and Scott and Jennifer may have similar experience here. In our case, we were already a distributed business. I think that's going to be a new norm. All of our team members work where they live. Right? In our case, we were focused on those who have weren't just out of college. They tend to be folks with experience. Experience really matters right now. I think that might be a new norm too, that we kind of look at the gray hairs a bit more, and perhaps there's some benefit there. So I think on the model side of how a new norm is in like a variable full-time employee, where you say on demand, I need this type of communications help, and you insert that into your business, where previously you were thinking through fixed relationships or FTEs. So on the model side, I think there's a lot of operating and infrastructure of new norm that's kind of exciting. Distributed, agile talent, that's exciting. And on the business side, openness, transparency, you don't even know that finance is part of the experience. I think that's exciting too, and something that, you know, we're looking forward to get behind in, you know, with public relations.
That's a good answer. We have time for one last question. I want everybody to take maybe 1 minute to address it. And I invited the three of you on to this panel because I feel like you all have your fingers on the voice of the consumer. What do consumers need most now? Again, I know it's really hard to distill that into one thing, but can you guys take a stab at that?
Well, as a parent of two kids who are in like public school, could we just have some certainty? Like that is literally like just all I would like, because but anyways, just kidding aside though, I do think that consumers are looking for answers and they're open to new solutions right now. So we need to run with that. And I think that anybody, we should see it as a positive and we should run with that. So be open to listening to your consumers, talking to your consumers more. Don't assume what was said 4 weeks ago is what's going to be the same 4 weeks from now. Just get really close to them. So I don't know what it exactly is, but I do know that it's changing and there's a lot more openness right now.
Great.
I'm going to build on that one. What consumers need is a trusted partner from their financial institution or series of financial institutions. And just because you can, like I talked about, handle transactions well, doesn't mean you're trusted. So how do we get to that lofty, trusted kind of status? And that comes by providing information, by providing ideas, by listening. And I know last year cross-selling was a really dirty word, but in concept, if you do it well, you're able to help somebody better understand how your products can better fit their situation. And I've only successfully been cross-sold once in my life, but it should be something that happens a lot more than it currently does right now.
Good answer. I'll build on certainty and trusted partner. And I'd sit back and say, where someone may have said to you in your life, keep business professional. Right now, business is personal. Make business personal. Professional business was when I received a note that said there was 100,000 businesses in front of me for consideration for a PPP. 100,000. Well, that sure gave me certainty, but I didn't like that certainty much. And maybe you should go look somewhere else. That was professional to communicate that way. Personal is when that same financial institution said, we did that wrong. And the banker called me and he said, I know we can't meet in person, but maybe I can come stand at the end of your driveway and we could just talk about what you're thinking through. Right? That's personal business and that's great business. And still their customer today, even though I might have run off to somebody else and I didn't do it. So, but I think that goes to Scott's point on trusted partner. And I think that goes to Jennifer's point on certainty as well. Just realizing the humanity that is the essence of public relations. We can keep that top of mind, and heart forward. I think we're going to be all right.
Wonderful. I think we have one question from the crowd. So if you guys are up to it in the final few minutes that we have.
Sure.
Okay.
Zoom in. Hey.
Hey, Shuman. Can you introduce yourself and ask your question?
Yes, it's Shuman Vanachari. I'm a writer and editor with Tearsheet. I wanted to get your sense about how, we've talked about the dynamic changing from financial PR being about publicity to being about authentic stories. But I feel like a lot of brands still feel very nervous about appearing authentic. Maybe they're afraid that it might open them up to vulnerabilities. I wanted to sense from you on maybe how you're thinking about, advising the brands you work with to not be so afraid to be authentic.
That's a good question. Part of the challenge is not everybody on the executive team agrees on what their authentic self is. So sometimes you become a psychologist and kind of work through that. Like, here's what other people are doing. Don't you think that would be kind of nice if we did something similar?
Yeah, if I built on that, we're all, each of us here are working with different companies in terms of the stage, financing level, maturity. Are they small business, mid-market, large enterprise? And so authenticity, as you get farther and farther, this may be a sad thing that happens, I hope never at Archie Group, but as you get farther and farther away from inception of the business, you sometimes need that reminder of like, what was your societal purpose for being? And businesses knew that when they started, and they need sometimes a refresh course. And so part of the answer that we've been using is reminding our businesses that right now they probably aren't in a period of idea risk. They're probably in a period of execution risk. And if they're in a period of needing to reduce their operating risks, they can enumerate what they might prioritize and authentically say, do we do that? Are we presenting it the way we do it? And be authentic in the moment. And then set up their next planning cycle to say, now we've gone through this all together, we've pulled back together, and how can we use these micro moments to build the big rock that we're going to push down the hill together on who we are authentically in the years ahead.
I'll just add one thing real quick, Zach, because I know we gotta end. But if your company is not developing relationships with reporters, it may be a lot more difficult to feel like you're able to develop that sort of authentic messaging and, showcase your authentic self. So I would say put everything sort of through the Zach test. Like if you're just gonna send Zach a press release every time you've got a new product that's out, and it's cool, he's going to cover it, right? And then he'll cover the next one that comes out maybe a year from now or whatever. But if you spend the time developing a good relationship with Zach and being a source for him, so sending him not just your new product news, but data and information and being a good guest on his podcast and all of that kind of stuff, I think it develops a comfort level within the C-suite or the senior marketers of just that this isn't just a transactional relationship, right? Like we have news, we give it to somebody, they write on it. It's that personal part of public relations that some companies have been either just loath or uneducated on how to do it. But if you can do that, then I think that all of this flows much nicely from there. So I'd say we'll call it the Zach test, and if you can do that, then I think it drives us all in the better direction.
Thanks, everyone.
I love that term. So, and thank you for your question, Shimon. I'd like to thank you, Jennifer, Gregory, and Scott. You guys are truly PR pros, and I think this was a wonderful discussion, and I think enriching sort of the conversation that's happening around what's going on right now, much needed and well timed. So thank you all for your participation in the event.
It's awesome.
Thank you.
Thanks, really appreciate it.
Nice to meet everybody too. Find you offline.
And with that, we'll call it a wrap for today. For those of you going to join us day 3 tomorrow, please do. And we've got a great slate of speakers as well, and another panel from some of our opinion makers as well. So thank you, everyone, and we'll catch you tomorrow.
Very cool.
Bye-bye.
Thanks, Zach. Bye, guys.